Look at this incredible market. Once again, everything here looks really beautiful. We're standing at $118,000 for Bitcoin, and for everyone who watched yesterday's video, you know exactly that I said if we sustainably break above $118,000, that would, for me, signal new all-time highs, and that's exactly what we've done. I can quickly explain it to you, because from a technical analysis perspective, we were in a downtrend here. Normally lower lows should have formed here, but that didn't happen. Instead, we already formed higher lows here, which is a good sign. But then it was very important that we broke properly above this last high, because that means we're no longer in a downtrend. From now on, we're in an uptrend. And that's extremely positive, and you can see it immediately across all the altcoins. The entire market reacted very positively to this yesterday. We can also see that just yesterday, $6 billion flowed into the open interest of altcoins alone. This is real capital that has flowed in here. Incredible. That's why the altcoins look the way they do right now. A really great sign. And yes, just by looking at this data, we can see that October and November are the best months in the crypto space, and that's exactly where we are right now. Now, I'll tell you why I believe the next 3 months could be absolutely huge in the crypto sector. Just a little thing I mentioned to you in yesterday's video, before we saw such a big increase, the US shutdown that started yesterday. A lot of people think that's negative or something like that, but it's actually incredibly positive. Every time after a shutdown, we've seen a really nice upward trend here. I showed you that yesterday. I showed it to you yesterday using the charts. And during the last shutdown under Donald Trump, we actually had the biggest upward trend we've ever seen after a shutdown. So I'm not worried at all about this shutdown, because I know that in the long run, the shutdown will get the economy going again and bring in fresh money. That's why it's really not that bad at all. But for this cycle, you just have to understand what's going on here. And what's going on is simply that things are a bit different than usual. Because in this cycle, it's really like this. We see a strong upward trend happening pretty quickly, followed by a long sideways phase. A strong upward trend, sideways phase, strong upward trend, sideways phase, upward trend, sideways phase. And that's actually pretty easy to understand, because every time after a bigger upward trend, we simply have whales, people who bought Bitcoin at $10 and who own hundreds of Bitcoins, and they just sell off bit by bit here. They don't care about that. Some of them have been holding Bitcoin for 10 years, or for 5, 6, 7, 8 years. They're already financially free, but during the biggest upward trends, they just sell a few hundred Bitcoins again. And of course, that slows us down a bit here. But every time that happens, old whales who have been in the market for a long time sell off their Bitcoin holdings, which of course slows the price down a bit. But on the other hand, we have people like Michael Saylor, institutions like Metaplanet, who are investing multi-millions here, or other institutions coming in through the Bitcoin ETF, and that's exactly what sets the market apart these days. We are currently seeing old, large wallets selling, and the money is being shifted into the hands of institutional investors. And that's a positive thing, because this way we can rise much better and much higher in the long term. Just because everything is dragging out like this, you can already see that nowadays, with Bitcoin at nearly 120,000, everyone is pretty relaxed. I mean, just imagine that 2 or 3 years ago. Back then, no one would have expected that 120,000 for Bitcoin would be such an easy thing. Nowadays, it's an easy thing because the market keeps cleaning itself up bit by bit, and that's why we can surpass these levels by far in the long run. And what you also have to understand here is that we can only achieve all this with the institutional investors, because they deliberately push Bitcoin back down after every upward trend, at least partially. It's clear that they're trying to stretch out the cycle here so that the institutional investors can collect more fees through charges and such. The Bitcoin ETF only profits from the fees after all. That's why it's obviously in BlackRock's interest for the cycle to last as long as possible, so they can make as much money as possible, and they know exactly that their own Bitcoin holdings will become more valuable this way. Because you can see, every time we try to break out of this range here, out of the game range, so you could say, hey, we're now in the overheated zone, every single time we got pushed back down. And that's the thing, they're trying to stretch out the cycle here. It's clear, the advantage is simply that the price targets keep getting higher. Just with the P-cycle top indicator alone, the indicator that has been right every single time, we always had to cross it properly with Bitcoin. Once we broke through, we were really in the euphoric phase, alt season, everything was exploding. We briefly tested it here once, then immediately dropped back below it, because the big players didn't allow the crypto market to overheat too quickly. But to test it again now, we would need price targets of over $180,000 per Bitcoin. And that's what I'm saying. It's dragging out and the price targets keep getting bigger. And the interesting thing is, with the social risk score, we're currently at $118,000 and nobody is interested in crypto. We have less retail participation here than ever before. And that's extremely positive because everyone knows that in this cycle, we'll get more retail investors than ever before. But right now, they're simply not here yet. That's exactly what this chart shows us. Even though Bitcoin keeps rising, we barely have any retail market here. Because what this graphic shows is incredible. Here we can see the 30-day activity of retail investors in relation to Bitcoin. And we can clearly see, hey, there's a strong upward trend here and retail follows right behind. That means in green here, we see retail coming back in, a bit of euphoria. Here, during the last upward trend, it was exactly the same. But what we're seeing now with this upward trend is that almost no retail investors came in anymore. Retail has given up. And so congratulations to you for watching this video right now. You're already way ahead of most people. Retail has given up. They don't even believe in an altcoin season anymore. They don't believe in a euphoric phase or anything like that. And it's exactly when the mood is at rock bottom that the exact opposite can happen. I just think that the next 3 months could be super exciting, especially right now, because the numbers speak for themselves. We still have 2 more interest rate cuts coming this year, which is extremely positive. We have this US shutdown, and as I just showed you, every time after a shutdown, we've seen a nice upward trend. There are a lot of things right now that point in that direction. Of course, we still have uncertainties in the US, that's definitely true, but I think things are slowly getting better. Another argument you can definitely count is the activity of the big investors. Michael Saylor, Bitcoin ETFs, and so on. They're still buying Bitcoin. They're not really selling. That's extremely positive. And especially here with Ethereum, that's just incredible. Especially during this little dip, we've seen so many whales accumulating again. You really shouldn't miss that. Ethereum is also an extremely interesting asset for me right now because we have the on-chain data and we can see that the big players are accumulating more heavily than ever before. Look at this upward trend of Ethereum addresses holding over 10,000 ETH. That's honestly insane. Look at that. Bitcoin has been following the M2 money supply extremely closely over the past few months. Seriously, everyone was talking about it. Right now, that's not the case, which is why no one is talking about it anymore. Now, the M2 money supply doesn't seem to be that relevant anymore. And what you have to say here is, of course, the M2 money supply isn't always 100% in sync with Bitcoin. That's just not possible. Bitcoin also needs a correction from time to time and things like that. But I'm almost certain that Bitcoin will reclaim the M2 money supply. We will reclaim these zones here and close the gap in between, because right now there's a huge gap between the M2 money supply and Bitcoin. Just take a look at it. And usually what happens is that the charts eventually come back together and this gap simply closes over time. And I think that's something I can really imagine happening right now, because you have to realize we had this correction here, but we've probably already seen a bit of that correction here. And now with the M2 money supply, we have a SR. We're currently seeing a lot of liquidity again, and I think that's going to flow back into Bitcoin as well.
And while I was editing the video, we're already at almost $20,000 per Bitcoin. So my prediction was, right after all, that if we break through this mark, things can move pretty quickly. My prediction is still that we're going to see new very soon. We could be targeting. But of course, it's also possible that we'll find a strong resistance zone here, because right in this area there was also liquidity. Nevertheless, I don't want to keep rambling on. Thank you for tuning in. See you next time. Bye.